Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein of Linn & Associates with your metals market update for this Monday. And we're on the 26th of March, 2018. Okay, big break in the dollar. Gets a rally going in the metal markets, but not all of them. And let me explain something else. You see these closes. These markets were a bit lower than this on the close, but not copper. It was a bit higher than that at the end of trading. These are the settlement prices, but there's a difference between a settlement and the last trades of the day because metals like to close about, 3.5 hours earlier. They settle the market 3.5 hours earlier than the last trades of the day. Go figure. But the market getting a bounce. A lot of traders looking at this 1360 level to see if the market can add to that. And the reason is you've been here before. You can see that on the weekly area chart of closes. And the question is, can the market keep going? Now, when you look at a weekly chart, you're not seeing 1360. That's the June contract. This is the April. That number translates to the 1355 area when you're looking at a weekly chart. But when you come to a close of daily only, you can see where that 1360 level is coming in. This has been quite a vertical price rise, and the question is, are you running into resistance area up here? And we'll get to that in a moment. As you can see in the market, you've had an inside day that broke out on Friday and did have follow-through today. When you put a swing line on it, and this is the same chart, that's this chart with the swing line, I can clearly see I've got a pattern of higher lows and higher highs according to the swing line. Therefore, until you take out 1330.30, the market is in an uptrend with that pattern. When I look at key moving averages, now the 18-day average is marrying itself right up to that. It'll probably climb a little bit higher tonight, in fact, because you're going to lose some data back here and you're going to add some of this recent higher data. So I'm looking for that average to climb. I'm going to look for support between that 18-day average and the 100. But if you take out 1330.30, this swing up, that whole move, comes to an abrupt end. Doesn't mean the market has to fall. It has to rebuild itself. So what the bulls don't want to do is take that number out. As I said about resistance, you're 2 days in a row up and over the upper Bollinger Band. So here's the question. Is this sideways action that we had enough to propel the market sharply higher, or does the market start running out of steam because you're 2 days in a row over the Bollinger Band? You're going to say, Ira, why does 2 days matter? And here's what it is. Bollinger Bands are an algorithm based on an idea, the formula, that the market will trade within them 95% of the time. Often, when the market gets above or below, it's a sign, and it could be, if it's not a base sign, that you're going to exhaust that move. I like to see tighter sideways action to get it going. Does that mean it has to fail here? I don't know. Here's what bothers me. You're overbought as can be, nowhere near converting this from a overbought condition and locking in a bull trend. You're 2 days up and over the upper Bollinger Band. I happen to think the pros are taking money off the table right here. When we come to the gold-silver ratio, you can see you're up to 81.43. You've been as low as 79.90. I was on Fox today, and they were talking about this ratio and asking people about it, Fox Business today, and I consider this ratio extremely high. I'm bothered by that. One of the people I was on with said, well, they see it going even better than this because they think inflation is going to return and industrial metals aren't getting that bid. Okay, then I question how inflation grabs hold without it, because generally you get the inflation when you have good economies, and they're represented by moves in silver, copper, and the like. The silver did get up to the upper Bollinger Band in the 100-day average. The way I teach charting, I think people were coming out against that number, and they'll look on pullbacks to see if the market can hold the 18-day average. The risk would be not getting under the 1633 level. In the copper market, you now have 3 days in a row under the lower Bollinger Band. The problem is you're trying to embed. Embed means when you take the slow stochastic momentum indicator and you get the two numbers that make it up, the K and the D line, the blue and the red. These are just the parameters of 80 and 20. When you're under 20 for 3 days in a row, the market is said to be converting from what? From being oversold to locking in a bearish condition. You had both numbers under 20 today. On Friday, both were under 20. Not on Thursday. Tomorrow's a key day. The odds favor what? That the market will try not to embed and that it'll try to get back over the Bollinger Band. It doesn't mean you're going to get a big move. It just means that that's what the odds favor. In the platinum market, there's a battle brewing here with higher lows, lower highs. I think you can see that. Oversold condition, a tightening of these Bollinger Bands. They're just moving right in on you, and volatility just came out of the market. You're not getting much of a move. You've almost got the same thing in the palladium market, but momentum is down here. You fought your battle, past tense at the 18-day average. You're trying to break out to the downside into the lower Bollinger Band, where I would expect that to climb tonight. And the market, if it can hit it, that's where I'd look for the pros to be covering some of the shorts. Is there a buy signal here? Can't get one the way that I teach because you've got a lower low. Even if you took out this number here, you'd have just a higher high and a lower low. That's not a trend. Dollar index, oversold, running the lower Bollinger Band the first day under it today. So we saw a market that sort of fell apart, if you will, but the odds are this. When you get a big move on a Monday, you often get a small reversal of that or a reversal of it on a Tuesday. Let's see if that holds true in a bunch of these markets. I'd be looking at pivot points tomorrow. You know what a pivot point is? A pivot point is basically moves that find a center line and resistance points above it, buy zones below it, support zones. Now the question and the problem for a lot of people is, are you trading against the trend? What it takes is it looks at the previous day's high, low, and close, and the formula determines supports and resistance levels for you. And that's what you start looking at. And for example, here's the center line. If the market would rally to the first resistance, you can even put stochastics on it and see when momentum starts shifting, is that where the sellers are coming in or the buyers coming in if you go down to the blue line. I put this all together in a two-part series for you in video so that you can learn how aggressive it is, what it does, and maybe it fits in and helps you find exit points in a market or entry points. How do you get it? Give us a call. Go to our website. You can click up here or underneath us at any point. You can click on some of the websites. It'll say, click here for Ira's free information. I'm Ira Epstein. Talk to you tomorrow.